As we are seeing, the cheap money is taken out of the system. Every asset class is struggling, whether this is stock market, crypto market, or housing. And it looks like we are heading towards a big recession. But nobody's paying attention to one important thing, and that is rent. The rental market is getting hotter. The rents are going skyrocketing, and there is a valid reason behind it. In this video, I'm going to cover 3 main reasons why the rents are rising and why the rental market is going to be even stronger this year. So without further ado, let's dive in. If you are new to my channel, my name is Yasin Nizami, and I make these videos to educate my audience about real estate market in Canada, some macroeconomics, some financial education, because I think everybody should be looking into getting themselves financially literate a little bit basically, and a little bit of technical sales. So if you are interested in any of these topics, consider subscribe, and let's get back to our topic today. So what we have seen in the last 2 years is very loose monetary policy. Okay, that means the interest rate were pretty much zero. There was an excess amount of stimulus in the market to drive the economy, because since March 2020 the economy was actually going into recession. In order to get the economy out of recession, central banks stepped in and they put an extraordinary stimulus into the economy, which means pretty much zero interest rate and a lot of liquid money that is being pumped into the market in terms of PPP loans, what you call it in US, the SERP checks in Canada, things like that. As a result of that, that cheap money somehow goes into the economy, and then it drives the consumer prices up, whether this is asset prices or some consumer goods prices. If we focus on the asset prices, we have seen there is a big bull run across the asset class, whether this is stock market, crypto market, or housing market. We have seen a bull run in the last 2 years, and now finally we are seeing both Federal Reserve and Bank of Canada are now pulling that stimulus out, right? So they are increasing the rate, the interest rate, and they're also taking the extra stimulus out of the economy in terms of stop buying the government bonds, which was also inflating the economy. So as a result of that, all the asset classes are struggling. Stock market, we have seen the carnage. Crypto market, we have seen a collapse, a complete collapse across all the cryptocurrencies. And now we are seeing the housing market is also slowing down, not only from the sales volume perspective, but also from the average price perspective, right? So since February was the peak. Since then, we have seen a significant reduction both from the number of sales perspective as well as the average home price. Keep in mind that some neighborhoods are still selling hot, especially the detached market, but I think the townhouse category is something where we're seeing a lot of pressure, downward pressure. Now in this whole scenario, like, nobody's paying attention to the rents, because if you see the mainstream media, the news headlines, nobody's talking about the rising rents. Rents are skyrocketing right now because they were already climbing up compared to last year. Like if I look into the TREB statistics for last year, Q1 2022 versus Q1 2021, there was a significant increase in terms of rents, almost 17% year-over-year growth. But I believe, based upon my own analysis, that the rents are continuing to go up. And there are 3 main reasons, and I can break it down to you. Number one, if I was the first-time home buyer, okay, I was planning to buy a property this year, but when I look into the dynamics in terms of market slowing down, rates are going up, which is going to affect my qualification in terms of mortgage, but also I would be scared to jump into this market because maybe the market will further go down. So what I will do, naturally, I will take a step back and think about it when I should be going back into the market. Okay, so as a result of that, I'm not buying a property, but I'm also continue renting. So the property that I'm renting was supposed to be put back into the rental supply. Now it's not, right? So I'm holding that property as a rental property, and I'm not leaving that property anymore. So that rental supply is going to be reduced as a result of that, right? So that's one aspect. The second aspect is, typically there are 2 types of investors, right? one type of investor where they buy the property and they flip it and make money. Okay, so they buy, they renovate, they flip it, they make profit, and they move on to the next one. Okay, so that's one type of investor. There is an other type of investor where they buy and they typically are passive investors. So they buy and they put the tenant into their property. They can start making some rental income. Okay, so that type of investor actually add rental supply in the economy. If I'm that kind of investor, I'm seeing the property prices are going down, I will also take a step back and realize, okay, maybe this is not a good time for me to enter into the market because the rates are also rising. Maybe the mortgage payment will be more expensive than the rent. So I should take a step back and revisit my decision later on. In that case, the rental supply that was supposed to be increased as a result of my own purchase, now it's not happening. So again, the rental supply is going to be further reduced. So two main reasons I tell you, okay? In addition to that, because the inflation is rising, right? We have almost close to 7% inflation in this country. According to government statistics, the real inflation is much higher. But if I am the landlord, I have existing portfolio of rental properties. If I'm not keeping up with the inflation, naturally I will increase the rent, okay? Although the landlord board guidelines is 1.2%, average yearly increase is allowed, but only for the existing tenants. If I am, giving a property to a new tenant, I can ask whatever rent I want, right? In that case, the rent is going to be even further higher. So in those three cases, my analysis is saying that the rents are going to be further higher this year, because I was looking for a property in Milton area for my client, and I could not find a 2-bedroom stack condo less than $2,600 a month. So you can see how expensive the rents have become. Which this is a Milton area, which is far from the downtown core, but even then, the rents are much higher. The basements in Milton area are being rented for like $1,800 and $1,900 a month, 2-bedroom basement. So I think the rents are going to be much expensive because of all these reasons that I explained to you. So if you're a tenant looking for a rental property, you should get in as soon as possible, because the more you take time, the more you have to pay later on to get into a rental property. So I think this is a difficult time for everybody in the community, because as I said, the free market economy is something different, but this is not. This economy is full of interventions from the government, from the central bank, and when you have these kind of interventions, they don't end up on a good note. The result is something like this, which we are observing right now. So anyway, I could be wrong. This is my analysis. I want you to let me know what you think. What are you seeing in your community, and what is your observation so far in your area? Put your comments down below. Let me know what you think. And my whole purpose of this video is to educate people about what's happening in the market, both from the housing perspective, but also from the finance perspective. I think everybody should be able to understand a little bit of basic financial knowledge so that they can make their decisions based upon a well-known facts around them. So if you like it, give me a thumbs up and share with your friends and families. And thanks for the support. This whole channel is all about educating people about financial literacy. So thanks for the support, and I'll see you in my next week video. Take care.